At the temple, right?
Hey Manoj, how are you?
I'm good, Mukund. How are you?
How was the weekend?
Weekend is almost over, but it was good so far.
Yeah, no, I think I was watching yesterday um, the football game, NCAA, college
Ah,
football game.
okay.
My son studies at UW, University of Washington, so that was like a totally one-sided game. And then I was watching the some parts of the Texas Alabama game. That was a good game. That was a really good game. Today,
I
of
didn't
course,
watch it
Seattle
because
plays in
I don't
Baltimore.
follow US football, so I have no idea what happens and who is winning and who is losing. I just know one of the team, which is Cowboys, which is Dallas Cowboys. I just know because some of my friends keep talking about it. Otherwise, that I have no clue.
Yeah, Dallas Cowboys are America's team. They claim to be America's team. Awesome.
Yes.
Let me just quickly go through some of the earnings from last week. There were
Mhm.
six companies that actually had good earnings. The ones that I was watching anyway. Smartsheet, UiPath, and CXM, which is Proud Social, had good earnings. And then there were a few other ones like AI, DocuSign, BRZ with that not great. So let me just quickly go through a couple of them. Smartsheet, overall, I'm not convinced this is going to be necessarily a terrific stock overall. I'm still watching it closely. Smartsheet is a good company. Earnings were good. They announced good earnings. The stock went up after earnings, but if I look at the weekly, there's almost a potential, inverse, head and shoulders formation. So I'm a little bit worried about that. They've had a good base that they've built over a period of time, but I would be watching this. There's still a lot of clearance from 43 to 49. It's got a lot of room to go up, at least another 10-15% before it makes a move. The second one in terms of earnings was UiPath. Good earnings. Again, stock went up a little bit after the earnings, but this stock is just building a base. If you look at it, if you zoom out, it's got a nice formation at the bottom. This is still stage one, though. There is nothing here to indicate that it's out of stage one. And if I go to the daily, there seems to be this range that seems to be trading at somewhere in the $10-12 range. In fact, maybe a little bit higher to the $12 range, and all the way up to resistance at the $20 range, $21 range. So still watching, but nothing interesting yet. And then the third one, which I think was interesting, was Sprinkler. So this is an interesting stock. Again, was range bound. This is a company that went up pretty significantly at the IPO. Look at this beautiful down.
Wow.
There's nothing
Wow.
down after that. And then now
Wow.
it's trying to rebuild. If you go to the daily, you can figure out very quickly. It's been trying to rebuild after a little bit of a base. It's been a slow moving base, but 8 consecutive days of green candles. If it breaks past
Mm-hmm.
16, 26, 1630 range, the next stop, I would say, it's still got some moves to move to prove to me, but the next stop would be 1873. It looks like it is in a good uptrend, but still not lots to be watched. The channel looks okay. It's been behaving well within the channel, consistently within the channel. Um, it had moved through a lot of resistance in the 14 range. Now it's in the 16 range, but still a lot of resistance in the 19-18 range. So those are the three earnings. AI as a stock, I'm not convinced this is a great stock, but it's been behaving very well for all the meme guys. If you look at the weekly chart on C3.AI, lousy earnings. Actually, the CEO said that they were going to become profitable a year ago,
Mm-hmm.
and nothing, no
Did not.
mention. He says, well, it'll take a little bit longer.
Right.
It's not great. The stock, essentially it's built a nice bottom, but then it went up on this whole AI meme news, right? Nvidia and a lot
Right.
of these
Right.
companies. But then after that, it's been pretty weak. Again, I would not expect this stock to go anywhere in the short term. Range bound would be my assumption. In fact, I'm going to tighten the range up a little bit and say it should probably stay within the 17 and 30 range for at least a little bit longer until it breaks out, and if it breaks out. But those were the companies I just wanted to quickly mention. Those were the ones that I was watching last week in terms of earnings. Hopefully, you guys got a chance to be able to see earnings as well. How are we doing on the week on the major indices, Manoj? What is going on?
So this time I would stay away from showing my future chart, and I would rather focus on the SPY, QQQ, and DIA. Reason behind that is because on TradingView there was a change in contract from September to December, and because of which the pricing has been distorted on the chart. So I would rather focus on the SPY QQQ to give us it gives us a similar chart pattern, because there are basically the ETFs of the main indices. So this is what it is showing. It's still in that formation of head and shoulders, and it broke down of this red channel which is showing here. After the breakdown, it tried to enter again, and again it fell down. So the chances are that it will. So that's a daily chart, and if I move from daily to 15 minutes, it's building this bear flag. So I'm cautious. I'm not holding any longs, and I'm not even holding any shorts. I would enter the shorts once it breaks down of this bear flag, which is on the 15-minute charts. But again, since it is a SPY, which is the ETF, it opens when markets open. Chances are that futures would have already reacted much before that. Futures open today at 5 p.m. CST. If markets react before that, and if it has already broken down, then I would not get an opportunity to enter the shorts in the futures, because the futures price, as I said, is distorted. It is not showing exactly clear picture because of the gap of the September and December futures. There was like 50 points gap, and that is not something tradable.
50 points gap is a lot.
Yeah, because so this is basically called as a spread trading. Basically, what happens is there is a 3 months gap between September and December. This gap gives a time value. So normally options have this time value kind of a thing, and futures do not have. But still, there is a 3 months time between the current month and the 3 months of December, and hence there is a time difference. So depending upon what kind of expectation markets have built up, it will have a short or a long thesis. For example, right now people do not expect markets to go down a lot, and hence there is a 50-point premium to the December future. But if markets are very big, if this was to be seen in the last year, it would have been maybe 20-30 points discount as against premium. So it depends upon what kind of markets we are in. Accordingly, markets will show premium or discount. So yeah, this is SPY. Again, in the 15-minute candle, it shows that there is a bear flag forming. On daily, there is channel breakdown, as well as this head and shoulders, which is still not broken down. So actual breakdown would be somewhere around 434, which is the neckline, 434, 430. So once it breaks down, then we can convincingly say that yes, it is a clear-cut downtrend. As of now, it is not a clear established downtrend. It is trying to establish the downtrend on the daily and the weekly time frame. So I would initiate the short in tactical short once it breaks down of the bear flag on the 15 minutes and the hourly chart.
Yeah.
Yep.
It's still got a ways to go.
Yeah, ways to go.
I think the way I was telling a lot of people in my video also was, this is just a undetermined market.
Absolutely.
During undetermined markets, you're better off. Well, in my perspective, undetermined markets, just sit and watch. Do some reading, do some research.
Right.
Don't take positions that are long, or don't take positions that are short either, because the direction is not very clear.
True. Let's move to QQQ. So Nasdaq futures are showing clear head and shoulders, but QQQ is not showing a very clear head and shoulders kind of pattern. So I'm just sticking on to two channels. One is this bull flag, which is broken out, back tested, and again rallying up. So whether markets rally up from here or whether it wants to break down, chances are it wants to stay up, because if you notice on Friday and Thursday, ES was down, Dow Jones was still kind of just up, but Nasdaq was still holding up. Tech stocks are holding up the market. So if markets are able to sustain this 20 and 50 MA on the daily, chances are we probably are done with this downtrend. But again, it's not an easy market. We cannot easily say that it's done with, or whether it wants to go higher or lower, unless and until we say the next few weeks and few days. I would say next week would be far more critical than the past 2 weeks in terms of the way market wants to frame its thesis. Again, some people say that seasonality is favoring the bears. I'm normally not the person who normally tracks the seasonality. I normally prefer my charts and then some kind of earnings or the macro news that's coming up. But I do not go for the seasonality, because that doesn't function for me. That doesn't work for me.
Manoj,
so I would actually
for you.
Yeah, tell me.
So when I look at this chart, you said there's a potential head and shoulders forming. Let me make sure that I understand this very well, because I have this question quite a few times. The question is, I can see clearly the head in the 390 range, right?
Right.
I can see the left shoulder in the 372 range.
Right.
Right shoulder seems a little bit higher.
AAT.
Is that still a head and shoulders pattern?
Yes.
Or are you saying
So,
because I want to make sure that I understand that.
absolutely. So there is a very, people assume that head and shoulders should be equal in terms of both the shoulders should be equal. No, it's not necessary. It can be a little higher, it can be a little lower, but it should not be higher than the head itself, and it should not be way lower than the neckline itself. So this is the neckline. Let me just, form it so that people understand what I'm talking about. So this is the neckline.
That is
Right
one
shoulder
left
and
shoulder.
the
Yeah.
left shoulder. There you go. If you look at it from a Nasdaq point of view, Nasdaq futures point of view, you'll be able to see that the head and shoulder pattern is very clearly visible. In this case, it's a little distorted, but still it is a head and shoulder. But it cannot be said that it is not. There is a little higher. The right shoulder is a little higher than the left shoulder, but it is fine. It can be sometimes lower than the left shoulder as well. It cannot be. So I'll show you Tesla. Now this one, I would say it was a little tricky in terms of calling it a head and shoulders pattern. So I had found this. So this right shoulder is actually not exactly a right shoulder. It continued to be a downward drift. There was no little higher high made. So this is a little tricky one. You cannot call this is the head and shoulders. But in terms of QQQ, yes, there is.
Yeah. Yeah. Another question I got. Okay, now on this chart, just stay on this chart. When you draw the zones, right? Supply zone and demand zone.
Right.
On the weekly or on the daily.
Right.
Are you drawing it with a tie back into the price, or are you drawing it just as a rectangle?
Okay. So you normally, so for example, if you look at, let me just go back to a perfect chart which gives us exactly which zone it is to look forward to. So for example, this particular chart, why have I drawn this particular zone? It's a parallel line, but why this? So if you notice somewhere around here and here, the prices, so look at this zone. It went back and then retracted. It came down and then again went up. It came down and then again kind of dilly-dallied here, and then again it is dilly-dallying here. If you look at the past history as well, it will give you the same clue. Why is it so? Just look at this. From here it retracted again, then fell back, and then again rallied. Fell, then rallied. And then here is the day when it actually fell a big time. I think it was after the earnings.
Yeah, there was a big gap down.
Yes. So this is where it is. It couldn't sustain beyond this and then big gap down. So this zone is a supply zone and demand zone for me.
Got it. And are you drawing it as a Fibonacci? How are you drawing it?
I draw it as a parallel channel. So just look at this, and there is a parallel channel.
Got it.
Yeah.
Okay. Very cool. All right, let's go to DIA.
Pretty clear, as similar to what we see in Dow Jones futures. It's the daily rising wedge, which is still holding up and just about to break down. There were two times when it wanted to break down. One was at the end of August, and then again last week. I would say that it is just about time that it breaks down of this rising wedge, and then we have weakness, at least in the industrial names. It has been weak for the past few days, and ever since it made this high around 355, 356. After that, it couldn't sustain any highs. Any highs were like completely sold off. So I would say it is on the verge of breakdown. Any rally is a chance to get out of the stocks, because it is not just this. And let me just show you the Dow Jones futures, which gives you exactly what I'm trying to tell you. You see the head and shoulders as well.
Wow.
Rising wedge and head and shoulders. Clear sign that it is not time to hold on to your longs. Now, this is where I was talking about the distortion. So Thursday or maybe Wednesday where it closed, and then Thursday Friday you see big gap up. Now, this is because of the premium in the December future. So there is a change in premium futures. And if you switch to the old futures, this is where it is. There is no gap.
Yeah, yeah.
You see? So that is the reason I do not prefer, when the top contract change, I do not prefer sticking on to old charts unless and until prices, go back to the mean, and which takes at least a week's time. Once the contract expires, September contracts expire, it will automatically adjust to the similar pricing pattern.
Got it. Okay, cool,
Yep.
good. Let's just quickly go through some of the stocks that I'm watching and we were watching. One of them was ELF. This is a beauty stock company, just to give you some context. I had
Before you go
mentioned,
to the chart, just help me understand what this business is. I mean, I saw its chart and I was like, what am I seeing? Am I seeing a chart, stock price chart or something else? Is it? I thought it is the SpaceX rocket which was just going up. This was amazing. I mean, I would
yeah,
never want to go into the stock which I have no clue about.
I have held it for a long time.
Oh wow!
I
And
love this
for the
company.
rest, time.
I wish I had bought it. So if I zoom out, just to give you guys a little bit more context, right? I'm going to zoom out a little bit on a weekly chart. It has been building a base, building a base, building a base for 6 years.
Wow.
I didn't buy.
2017,
I bought it a couple of times. In fact, there was another company called Ulta Beauty, which a lot of people liked, and I held it. Did very, very well for me for quite a bit of time. If I zoom out to an all-time chart, see this. It's beautiful. This is only period where it got a little bit of thing, but it's always been higher highs, higher lows. Took a little bit of a break, but then higher highs, lows again. Ulta is running a little bit out of steam, and Elf Beauty. This is a company that does makeup, beauty products, etc.
Have you been tracking the earnings of this particular company, Elf? I mean, how is it? I mean, in terms of fundamentals, is it the management good? Is the
Fundamentals,
earnings really growing much?
yeah, the fundamentals are super strong just in the last 1 year, right? To about a year and a half, I would say, 18 months. So this company essentially has been doing about, look at this, 20%, 15%, and then going down in revenue year over year. And operating income has actually been negative growth, right? And suddenly, sometime in the 2022 timeframe, 45% year over year growth. And you look at quarterly, it started to grow at 80% almost quarter over quarter. Growth has been strong. And at the same time, when you look at the valuations, it is also starting to show very much like a P ratio of a growth company earnings. PE is about 77. I mean, that is really rich. Well, it's a 75% growth company, right?
So in the last 1 year alone, or maybe rather 2 years alone, it has grown tremendously in terms of
18 months. 18 months. Look at 18 months. I actually bought it somewhere in the 68 timeframe. So I bought it somewhere over here, right?
Okay.
And 68 to 136 have had double. But look at this, 22. You go to the weekly chart, it's been a nothing but a beautiful ride from 22 to 177. And then if you look at the daily chart, there's no way I can draw anything more. This thing just is an unbeatable stock, consistently moving very, very well.
So I actually saw the charts when you actually shared with me. And there's only pattern that seems to be visibly, possibly bullish is this daily chart, which gives you a inverse head and shoulders, which is right here. Your somewhere, yeah, exactly. This is inverse head and shoulders, wherein you can try and enter once it breaks out of the neckline. And beyond that, I don't have any clue whether I would want to go into the stock. Maybe trade it for a day or 2 or 5 days whenever the stock gives you a breakout of the inverse head and shoulders. After that, I would get out of the stock. Honestly, because so if you go back to your weekly chart, what it tells me is while the stock has been making regular highs, there is RSI and MACD negative divergence. RSI and MACD are not making your new highs, whereas the stock is making. So that's a red flag for me, at least not be very long-term bullish. It could give out some correction, and that is the time when you want to enter into the stock in terms of whether you want to enter for a long term. Let RSI come back to 50s or 40s and let it settle down, let the stock settle down. So there are two ways the stock, corrects in terms of the oversold, overbought, or overbought, extremely high momentum. And that is either by way of price consolidation or by way of time consolidation. So I would expect the stock to show at least one of these two criteria for me to enter for the long term. And so, for example, you said the stock consolidated for 6 years. Those
Here's
fixed shares,
the
like the time
here's
consolidation.
the here's the interesting part, Manoj. In the last 18 months,
Right.
except for 2 weeks, it's never even touched the 20 MA.
This is very scary.
This
So
is a extremely strong stock. Extremely strong stock. Except 2 times, just once over here, once over here. That's it. This thing never gives you a break. Every time I think, oh man, it's going to come down to the 20, I'm going to buy more there, I'm going to come down to the 50. It's like, no, I'm not going to do that. This is a
for me,
ridiculously good
I
stock.
would just buy on a daily once the inverse head and shoulders breaks out, and then get out once it gives me 5-10% returns, because for me it's a risky bet.
Yeah.
But
For me,
again, this is what the market is.
Hold it from 68 to 145, no questions. I'm like, I'm keeping it. Okay. NBO, Novo Nordisk. Most of you guys probably know about this. Overall, this is a stock that you want to just keep for the long term. I am not giving this stock up. Novo Nordisk makes Ozempic and Wegovy, which are 2 drugs for weight loss.
Okay.
Fundamentally among the most strongest companies. Growth is through the roof. Again, the only time it's come a little bit lower is close to about January 2017 to the 20 and the 50 MA. 2017. That is the closest it's even come to the 50 MA moving average. Otherwise, this thing just, once it came down a little bit, this just doesn't give up. It's stretched. It's quite stretched from the 20 MA as well on the monthly basis. On the weekly, probably a good way to be able to buy it is if you can get it somewhere in this range, it's a good place to be able to buy. October 22 when it went down quite a bit, but this thing is not going to go down, man. Fundamentally, this company is very strong.
I don't think it's coming down to that. So if you are saying the fundamentals are strong, so I don't think the stock would come down to 120 sort of anytime soon. If it wants to even correct, there could be some correction in the range of maybe 150 and 170. That is a place to enter for a short-term long position. For long term, I have no idea if it is going to come down to 120 and that range. Not so easy.
I think you're going to find that if it ever comes down to the 20 moving average, 169, 170 range, if it comes down, if it has support in this region, because now there's resistance becomes support, 170 range, then that might be an option, but it hasn't been giving me a break at all. I mean, I bought a little bit, but very little bit at 153 quite a while ago. And since then, it's just been going up and away, man. Okay, earnings next week. Oracle has earnings next week coming up. I'm going to zoom out a little bit. This is not a stock that I'm very interested in owning. It has been doing well, though, in the last, I would say 6 months or to about 9 months. But every stock has been going well, or most stocks have been going well. But Oracle doesn't go down too much. It's one of those steady companies, does very, very well. This is the lowest it went to. So it's moved up from nearly in the range of about 58 to about 130. So it's doubled, 100% growth in the last 6 months. If you go to the weekly, again, had a good formation, moving up. Don't see anything that really excites me about it, but this is a nice small kind of a U pattern, I would say, forming a good base to a certain extent, but it's been strong. It's been a strong stock. On the daily as well, it seems to be very range bound in the 111. It's coming to a double top in the 127 range, so I'd be cautious about that. It's coming close to it. If it breaks through this resistance, then I think it has some room to move, because this hasn't done what it's supposed to do in quite a while. If you look at the long term of the stock, this is near its 52, all-time highs.
Right.
It's near its all-time high. So if it's broken a little bit of the resistance on the weekly, and if the earnings are good to okay, this thing is going up and up and up. I'm still not very bullish, but it's going up. But if it breaks and heads down, then you're getting a double top formation here.
Right.
On the weekly. We'll see. I think it's got loom a little bit more. 127 next week will be interesting to watch. And that's why it's coming earnings. Earnings are coming up next week, and this thing is near its all-time high.
Right.
127.54 is the 52-week high and the all-time high. If it has decent things, then this thing just rockets.
Like it is already at the high. So I don't think people should bother about, it's not making a new high. It should make a new high.
Should, but I'm not very more confident about Adobe. strong fundamentals, very good channel movement back again. It's broken through quite a lot of resistance, especially here in the 526 range. Now, the next step, I don't think it's going to go to 683 anytime soon, but this will be another interesting to watch, given that there was one red candle with close to a doji at the top. So on the monthly, on the weekly, it looks pretty good. I'm more confident about this stock than I am necessarily about Oracle, but both of them are doing fairly well. So this breaks down very similar to Oracle. If it breaks through this, actually Oracle is a little bit more bullish than this one. If it breaks to 581, 586, which I put as the resistance zone for it here, then it gets to a very good, inverse and shoulders, reverse inverse and shoulders right here. It's been a good channel though. It's behaving very well within the channel.
Right.
Those are the ones to watch.
Right. What else are you watching? I mean, this is what it is, and you think that all these ELF and these kind of small stocks that you are talking about, okay, will they be able to hold on to the if markets are expecting the kind of a route are expected to do? You think all these stocks ELF or NVO or would be able to hold on? I mean, I don't have any idea about the fundamentals. So I'm asking from the fundamental point of view.
ELF and NVO are very large cap stocks. NVO is in the 200-300 billion dollar range.
Oh,
so
okay.
They're close to a mega cap. They're not a small cap stock.
Oh, okay. I didn't know about it.
Yeah. ELF is a little bit more of a mid cap stock. They're about 7 billion in market capitalization.
Okay.
ELF has very strong tailwinds going for it. In markets when we're not exactly in a recessionary market yet, or we may never be, but it's still not a high spending market. Consumers doing fairly well. And when those things happen, usually the basic makeup stuff goes very, very well. So 70-80% growth, I don't see it slowing down anytime for the next 2 quarters. They actually increased their guidance. So I think ELF and Novo Nordisk, no chance they're going to go down significantly is my belief until the end of the year, even if the market goes down significantly. But of course, that's my assumption. I put a 50% probability, 60% probability to them holding their value reasonably well. But then again, ELF on one of those days, I wanted to show you a very interesting, let me show you this. This is super fun. The one day, so this is ELF on the weekly. Look at this one red. We go to the daily. So does a gap up on earnings, puts in a flag, and then look at that dump. It fills the gap in one day.
Yep.
One red candle. Who knows, man? Sometimes these things are weird. And you know what? There was no pending news on that day. Nothing made me say that it was good, bad, or otherwise.
Right. But again, within a few days, it went back to the new highs.
Yep. This is a strong company, strong stock. Thank you, Manoj. Right. Thank you, everybody.
Thank you. Thank you, everyone.
Bye. Bye-bye.